All right, let's dive right in. Something big is happening in the world of Web3. You can forget all that talk about the wild west of crypto because a brand new, much more structured chapter is starting to unfold. And it's being driven by forces that are probably going to reshape finance as we know it. Okay, so this is the question on everyone's mind, right? With governments finally stepping in, new rules are coming down the pipeline, and there's this real fear out there that, the party's over. But is that actually what's happening? Is this really the end of the line? Not even close. In fact, it's the complete opposite. What we're witnessing isn't an ending at all. It's the very beginning of a powerful new era of high growth. Think of it this way. Regulation isn't some cage they're putting crypto in. It's the bridge that's finally going to connect the crypto economy to the mainstream financial system. And that is going to unlock massive, massive growth. So to really get what's going on, we got to zoom out a bit. This whole shift isn't just happening in a bubble. Web3's new chapter is actually part of this huge convergence of three incredibly powerful economic trends, and each one of them is just poised for explosive growth over the next decade. I mean, just look at the company Web3 is keeping these days. You've got AI infrastructure and a huge surge in defense spending, and right alongside them is crypto. It's one of only 3 sectors that are projected to grow over 15% a year every year for the next 10 years. This isn't some niche little market anymore. It's becoming a fundamental pillar of the future economy. And when you see that kind of growth, it has some pretty huge implications. As the investor Leong Sinju points out here, when an entire sector is expanding this fast, just by investing in the top assets, you can get returns of 20% or more. I mean, that's a number that's pretty much unheard of in most traditional markets. So what's really lighting the fire here? What's the main catalyst? Well, it all comes down to the regulation of stablecoins. Now, I know that sounds a little technical, but what it's doing is creating entirely new financial plumbing for the entire world, and that is the engine driving this whole next phase. What this new plumbing actually creates is a global payment system that's, well, it's a total game changer. We're talking about costs that are practically zero, fractions of a penny. Settlement that takes 2 to 3 minutes, not 2 to 3 days. Security that's as good or even better than SWIFT, which is the system all the big banks use. And any business can tap into all of this with just a cell phone. Incredible. And get this, the system is also built to be way safer from the ground up. Take something like DeFi lending. That's decentralized finance. It has this triple safety net just built right in. First, all the loans are over-collateralized, so there's way more collateral than the loan amount. Second, a rainy day fund is automatically built up from the interest payments. And third, if something really bad happens, any leftover losses are shared across the entire pool of lenders. And the punchline to all of this incredible safety? You're looking at potential annual yields of 8 to 12% on high-quality, fully backed loans. That combination of high safety and high return is exactly what's about to attract a tidal wave of capital from the world of traditional finance. But here's where it gets even bigger. This whole revolution, it's not just about money. It's about, well, everything. The next giant leap forward is something called the tokenization of real-world assets, or RWA for short. This is where every kind of asset you can think of, stocks, bonds, real estate, art, becomes digital and programmable. The simplest way to think about it is this. RWA tokenization gives every single asset a digital passport. It takes the ownership rights of a physical thing, like a building, or a financial thing, like a bond, and it converts it into a unique token that lives on a blockchain. And that completely changes what you can do with that asset. And once an asset has this digital passport, the power it unleashes is just incredible. I mean, you can trade stuff 24/7, directly with another person, no middleman needed. You can use smart contracts like financial Lego blocks to automate entire businesses. And maybe most important, transactions settle instantly. Clearing and settlement happen at the exact same time. This blend of efficiency and transparency is going to change everything. All right, so this new world is clearly on its way. The big question is, how do you even begin to think about investing in it? Well, let's try to reframe the whole approach. Instead of just gambling or speculating, we can use 6 powerful analytical lenses, like a toolkit for any investor in this new era. Look, the simplest approach, just buy the market. Since we already know the whole sector is set up for huge growth, you can just ride the wave. You can essentially build your own crypto ETF. A portfolio made up of just the top 5 coins you see here, plus a little basket of other assets, lets you capture almost all of the market's value. It's a really straightforward way to get exposure. Strategy number 2, you've got to analyze the profit model. You need to ask, how does this thing actually make money? Where's the cash flow? Ethereum, for example, acts like its own little digital nation, and it collects gas fees, which are like taxes, on almost all stablecoin and DeFi activity. Binance Coin is different. It shares its profits with holders directly through things like buybacks and airdrops. You always have to follow the money. Okay, third, you gotta put on your data analyst hat. The cool thing about Web3 is that so much of the data is public. You can measure the health of a project using real-time on-chain metrics. Active Wallets tells you the size of the user base. The ratio of daily to monthly active users, DAO over MAU, shows you how engaged those users are. Gross merchandise volume shows their spending power. And total value locked, or TVL, shows you how much capital is actually inside that ecosystem. Lens number 4 is a big one. It's about finding what you might call supra-sovereign credit. That's a fancy term for assets that exist outside the control of any one government. Think about it. Every national currency, including the US dollar, is designed to inflate over time, to lose value. Bitcoin, on the other hand, has a tiny and even decreasing inflation rate. And because it's decentralized, it's almost impossible for any single government or authority to seize it. That makes it a really unique store of value. Okay, now let's look a little further down the road, because this is where things get really wild. In just a few years, there will be more AI users on the internet than human users, and they're going to need to transact with each other. They can't just open a checking account at Bank of America, so how will they exchange value? Well, Web3 provides the perfect rails for this new AI economy, and that user base could absolutely dwarf the human one. It's a huge long-term driver for growth. And finally, number 6, follow the youth. It's a classic for a reason. The tech that the next generation adopts is usually the tech that wins. And this chart shows a super clear trend. Newer platforms like Solana and even the meme coins like Dogecoin have way younger user bases on average than the pioneers like Bitcoin. That is a really powerful signal for where the future might be headed. All right, before we finish up, we have to talk about the elephant in the room, the big one, this idea that crypto is an inefficient, energy-wasting disaster. It's one of the oldest criticisms you hear, and for modern blockchains, it's just not true anymore. Let me be super clear. For modern networks like Ethereum, that energy debate, it's over. After it switched to a new security model called proof of stake, which is way more efficient, the network's energy use just plummeted. Today, it uses about 1% of the energy that PayPal uses, while still processing about a quarter of the value. That's not just a little improvement, it's a total paradigm shift in efficiency. And here's the really crucial point, the part that most people miss. Unlike the old systems, the energy used on these new networks doesn't really grow as you add more and more transactions. You can dramatically scale up the activity, and the energy consumption barely even moves. Modern Web3 is fundamentally a green and scalable technology. So let's bring it all home. We've seen how regulation isn't the end. It's actually the bridge to a safer, faster, more efficient financial system for everyone. But it might all be building towards this final, huge question. A world where AI becomes the single biggest user of the economy. So what happens when AI needs its own bank account? It's going to be built on Web3. And what is that world going to look like? Thanks for tuning in.